Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN Weekly for Saturday, December 19th, 2020. And our top story today, side hustles you can do from home. Joining me now to discuss this and a lot more is Jennifer Barrett. She's Chief Education Officer for Acorns. Jen, great to see you. Thanks so much for joining us this morning.
Great to see you too. Thanks for having me.
Absolutely. So let's jump in. You recently wrote a piece highlighting some recent Acorns survey. You wrote it for Forbes.com about side gigs, and side gigs are on the rise apparently. What can you tell us?
They are, and you know, we know that side gigs have been gaining in popularity for several years, so the trend was there before the pandemic. But I think what's really shifted in this pandemic, and what we saw in our research too, was that people are now looking at side gigs for essential income. So in the past, it might have been, oh, you're pursuing an interest or you want to earn a little extra cash. And now people are using them either to shore up their savings because they're uncertain about their future, or actually to pay the bills. So this is no longer just a side hustle in a lot of cases. This is essential income coming in for a lot of people.
And Jennifer, would you say, and you know, in terms of this thesis or this result, that a lot of this is just born out of the result of not only the pandemic economy, what we've all been experiencing with shuttered stores, working remotely, but a lot of people have said, look, I maybe don't want that corporate job anymore, or maybe I'm in retirement and I still have these skills and I want to do something that maybe is a little bit more flexible in terms of my time, my schedule.
I think that's a really good point. And there is a positive twist to this. I think, you know, the pandemic has been so disruptive for so many people, and some people lost their jobs, some people have reduced hours, and some people, you know, you're working remotely and you're starting to really question, am I doing what I want to do? So I think there's a piece of that as well, where suddenly people say, I've got 2 hours maybe of commute time that I can use any way I want. So maybe they're dabbling in something that they've always had an interest in. And I think that's a sliver of it. But I think really the reason for this surge in popularity of side hustles has a lot more to do with people being a little concerned about the future, not sure if they'll be able to hold on to their full-time job, or they've lost their job and now they are really depending on this side hustle income in a way that we probably didn't see before. So for example, Dollar Sprout has an annual survey that they put out, and they found more than 1/4 of the people they surveyed with side gigs are using that money to cover the bills. So that's a big distinction. And with Acorns, you know, we did a survey with Opinion Research, and we found that about 1/3 of respondents surveyed who have a full-time job had a side hustle on top of the job, mainly just to shore up their savings because they may be uncertain about the future and they just want to be responsible and kind of get ahead of it. So it's a slightly different reason for a lot of people to pick up these jobs. In some cases it's kind of a lifeline, but to your point, in other cases it's that we have a little more time on our hands now, and there are a lot of opportunities that you can take advantage of from home. So
yeah, I mean, some of us even become TV hosts. But
imagine that.
Yeah, imagine that. Face for radio, voice for silent films. But Jennifer, in all seriousness, I mean, we have been through some very difficult economic times. I talked to David Kelly from JP Morgan early in the week, who said that there are close to 10 million people who are still unemployed. You mentioned about shoring up finances. This is one way to do that. And when you look at all that negativity. But I kind of look at the silver lining here is that it's entrepreneurial. This is exactly what we want people to be. We want people to be self-sufficient. We don't want people to be under financial strain, but we want people to identify what their skill sets are and to try to do things to better their families, better themselves, and put themselves in better financial positions.
Yeah, definitely. And I do think there are a lot of opportunities. So in the story I wrote, one example, there are virtual assistants. That is a booming business right now. It doesn't take, a lot of skills to enter that field. And there's a lot of opportunity. Obviously, contact tracing, that's a new job. You can do it from home part-time. So there are opportunities there where you can do it from the safety of your home, make a little money on the side. And these are new opportunities that probably weren't there before. So you had virtual assistants, but I think the popularity of virtual assistants has really grown because we've got more entrepreneurs, we've got small businesses, we've got people at home trying to take care of their kids, homeschooling, all of these things. And so I think the demand for virtual assistants has gone up a bit. So you do see that there are these side gigs now that are more popular than they were before. And the other thing that we're seeing that's interesting is that a lot of companies, because they don't know what the future holds, I mean, now we have more reason to be hopeful with the vaccine, but there's still a lot of uncertainty out there. And so it's in their best interest often to bring people on a project-based basis, or to bring them on contract. So we do see a lot of people picking up those contract jobs or picking up those project-based jobs, which also fall under the side hustle category, but they're a little bit different there in that they can lead to something bigger, right? A company can hire you on contract, and as long as the economy approves, hopefully they'll hire you on after as a full-time employee. So yeah. I do think there are opportunities out there for people.
Yeah, my apologies for interrupting you. I was just gonna be in agreement with you. And I think one of the things that people really need to think about when you're doing the side hustle or the side gig or you're doing this full time is benefits. Because when you're working for a corporation, large or small, oftentimes, or not-for-profit or government, there are benefits that you get. So thinking about what you want to earn versus what you're going to pay in health insurance. Maybe you're buying things off the healthcare.gov exchange in terms of health insurance for yourself or your spouse or your family. Those are things that I think maybe people need to, I would think, refresh themselves about some of the rules and what the costs are associated with that and what that means to their overall income.
Sure. So I do think that we're going to see more need for tax accountants, financial advisors to sort of step in here, because these are more complex situations, right? If somebody is leaving a full-time job, they're becoming self-employed. Now you have to pay the self-employment tax, which a lot of people sort of forget about and then get caught off guard at the end of the year. Or, that you have to, as you point out, you have to buy your own health insurance, which can be, fortunately we have an option, but it can be pretty expensive. And that can be a shock to people. It's a lot more expensive, obviously, when you're doing it on your own because it's not subsidized anymore. So, it's always important for anyone who's moving into a contract role or who's picking up side hustles as their main source of income to keep that in mind, that they are then responsible to take that money out for taxes, to make sure that they're paying for the benefits and everything. So I do see, I talked to CPAs and I've talked to financial advisors, and they've said that they have seen a demand from people asking about these more complex questions too. So I think it's good on that end to sort of be prepared for this, because a lot more people are going to have complicated taxes, I think, in the coming year.
Yeah, I think the last thing you want in a time of financial strife is to get a tax bill that is double what you would expect if you have to pay Social Security or state, federal, local taxes. I mean, that could really bankrupt individuals. I think people really need to think long and hard about that. Well, Jennifer, we're going to leave it there. Great story as always. Really appreciate you coming on the program, and wish you and your family a very happy New Year, happy holidays, and we look forward to having you back on the program back in January.
Oh, thanks so much. Happy holidays to you too, and to all of you. Thanks,
Jennifer. And when we come back, some of our top segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Hi folks, Joe Namath here, and if you're on Medicare, this is important. You're now entitled to eliminate copays and get dental care, dentures, eyeglasses, prescription coverage, in-home aids, unlimited transportation, and home-delivered meals, all at no additional cost. Plus, your zip code may have coverage with the Give Back benefit that adds money back to your Social Security check every month. Look, with the uncertainty of the virus and vaccines, you need to get everything you're entitled to. Here's the bottom line. Call to get significant benefits at no additional cost and see if your zip code has coverage with the Give Back benefit. Millions of people have trusted the Medicare Coverage Helpline. You can too. Call now. It's free.
Call 1-800-924-3920. That's 1-800-924-3920.
Welcome back. On Wednesday, I spoke with Syracuse University's Josh Davis to discuss senioritis and how to prepare for that college transition. Let's take a look.
When kids get to the second semester of their senior year, they've often they're finished their applications, they're waiting for acceptance letters, and they kind of, like you said, they coast to the end of their senior year. Project Advance was started in the hopes of helping those kids stay involved and intense in their academic rigor. And so by offering them college level classes, the hope was that they would stay engaged in school and prepare for college. We consider ourselves a bridge from the high school to the college. So by taking a college level class in high school, kids are able to not just experience things like reading a syllabus or learn better time management, but the hope is that they will, by engaging in a high level, rigorous actual college course in high school, that when they get on the college campus, the other things don't overwhelm them so much, and they're used to the rigor, and that they can really be prepared for college learning. So concurrent enrollment, it's sometimes called dual enrollment also, is a program where high school kids take the high school class and they concurrently earn credit for college. So if a student takes U.S. history through us in their high school, they earn the U.S. history credit for their high school, but they can also earn the college credit. Now we do that by an intense training program where we train the high school teacher on campus for a week in the summer, and then they are certified to teach the Syracuse University course in their high school. And we have other checks and balances in place where they have to teachers have to attend a seminar. We do class visits to ensure that the rigor is being upheld in the high school. There is an accrediting body for programs like ours. It's called NACEP, NACEP.org, if you wanted to check that out. So I would encourage parents, as these programs kind of pop up around the country, to make sure that their program at their local high school is an accredited one. There are two benefits really for the student. One is, like you said, is the college credit. So you can save some money. So we charge a tuition for the kids if they want to take a Syracuse University course in high school, but it's much less than they would obviously if they took it on campus. So there is a way to save money for parents by signing up for some of these courses in high school. The kids can earn credits. But we like to say, like most of us students that take our classes only take one or two in high school because the rigor is, they're hard classes, they're college classes. And if they're being taught correctly, a high school student really shouldn't be taking 6 or 7 college classes while they're in high school. So there is the benefit of the college credit, but we think the real benefit is in the preparation academically, like I said before, as that bridge from high school to college, because kids learn what it means to manage time for multiple papers, multiple projects, how to read a syllabus. Now at this point, with all the kids learning online, how to take a college class online and what the expectations are for college level learning. I think it was a challenge for everybody in the spring when it first happened. I think we don't offer courses online generally, but since the high schools are when they all moved to online learning in the spring, we all had to adjust very quickly. So we did make some concessions as far as if kids needed to drop the class after the regular drop date and things like that. But we've tried to provide as much support as we can to our teachers, who are really the strength of our program. So we give as much support to them as we can. We did not see a drop in enrollment for the fall because, again, if the course is being offered in the high school, then we're there to support it. And there's been some discussion policy-wise. So programs like this have been popping up around the country. So again, when the questions start to go to DC and public policy is when the money starts getting involved. So there's been discussions around 529s. There's been discussions around allowing students to access Pell Grants early while they're in high school, but that ends up running out their clock. So they cannot do that. But again, programs like ours, we offer financial assistance for students that show need. The cost is already reduced from the on-campus cost, and other programs are free. Some of the community colleges offer the courses for free in their local high schools. So we work with a lot of high schools that might offer a couple of our classes, a couple of the local community college classes, a couple of AP classes, maybe another four-year school too. So most high schools at this point have kind of a menu of courses that kind of fit whatever the students, either their budget or their interests are. So when it started, it was just a couple of the local high schools, but now we've expanded into New York. We're in New York, New Jersey. We have a couple of schools in Michigan. We have schools in China. We have a school in Korea, Japan, Singapore, Dominican Republic. So it's multiple states and actually multiple countries now. A lot of this is dependent on each state's regulations as far as reciprocity. And I don't want to get too technical on the details, but we do offer in multiple states now.
And on Thursday, I sat down with JP Morgan's Dr. David Kelly to take a look ahead at markets and the economy in 2021. Let's take a look.
Well, I think the first thing is people need to be a little bit cautious and realistic about what returns will be from here. The economy and markets are very often on different sleep cycles. The economy wakes up, the market goes to sleep. The market wakes up, the economy goes to sleep. 2020 was a year in which we had the ultimate in economic and personal stress, and yet the market seems to have done pretty well through it. That's good. But the downside of that is that if you look at current valuations with price earnings ratios running at about 22 times forward earnings in the S&P 500, with 10-year treasury yields below 1%, those are both very expensive by historical standards. And we know that if you get into investments that are expensive, then over the long run you get lower returns. You don't know how you're going to get those lower returns, whether it's going to be bumpy or smooth, but you know you're going to get lower returns. So I think people need to be realistic about that. And then they also need to, I think, look carefully within a portfolio to see, well, what within the portfolio is expensive, what's cheap, where am I overweight unintentionally, and where am I underweight, where we should be thinking of adding some money. I mean, first of all, many institutional investors are sort of tied down because they have to sort of liability match. They have to have a certain amount of fixed income in a portfolio. Overall, high quality, long duration fixed income is pretty expensive here. And to the extent that I could underweight it, I would. And then you've got to find alternatives. Where else do you get income? Well, I think one place you get income is in dividend-paying stocks, value stocks in the United States, emerging market equities, European equities. All of them can pay you over 2% dividend yield, with the possibility of those stock prices going up over time. So I think that's a reasonable substitute. I think also, as you say, non-traditional assets, some alternative assets, things like infrastructure, real estate, transportation. If you can access these assets, which give you a good flow of income, that's another way to add to income here. And then also, I think you just need to look at the overall, sort of your overall flexibility in a portfolio. Can you really manage to sort of balance total return and risk? That's the best way to do it, rather than to try to just generate a certain amount of yield. Because a lot of asset prices have gone up a lot, and that's great. You've got a lot of money, but for your, you've got money to do what you need to do, but you shouldn't stretch out and try to get as much dividend yield or as much coupon yield as possible. You should be willing to sell some principal to generate that income if the asset itself looks pretty expensive in terms of its asset price. Well, I think in terms of the broad, does the market rally, does the market fall? it's very, very hard to time that. I mean, markets very often go up after an election, and for the simple reason that uncertainty's gone down. You kind of know where you are. And that's part of the story. Of course, we have the Georgia Senate elections in January, which will determine control of the Senate. But even if the Democrats win those, it will be very narrow control of the Senate. I don't think you'll see a radical agenda pushed through. If the Republicans retain a majority in the Senate, then the Biden administration will have to compromise with Mitch McConnell and the Republicans to try to get things done. So I think you end up with a more middle of the road set of policies on things like taxation and government spending. I do think you'll see more infrastructure spending, whatever happens. Both sides are in favor of doing more on infrastructure spending. I do think you'll see higher deficits or high deficits under either party because, frankly, there are no fiscal hawks left in Washington. But what I do think is going to be where there is going to be big differences in foreign policy, and particularly trade and tariffs. One of the things about the Trump administration is that Donald Trump was very unpredictable when it comes to tariffs and trade. I mean, particularly in 2018, there were tweets going out, and suddenly the tariffs in China were going up, and then they weren't, and then they were, and all that uncertainty really hurt the global trading system, the global economy. And it also strengthened the US dollar because we're actually less dependent on trade for our GDP than other countries are. I think under the Biden administration, we'll see a much more traditional policy. Yes, it will be aggressive towards China. I don't think that Joe Biden will get rid of the tariffs overnight. I think all this will have to be negotiated. But it will be a long-term strategic planned negotiation. And in that kind of environment, I expect global trade will go up, but I also think the US dollar will go down. And I think there's a lower US dollar will help the profits of US multinational corporations. It will help do something about our big trade deficit, but also it will amplify the return on international investments. I mean, it's one of the simplest relationships in finance is that, if overnight the dollar goes down 10%, then the next morning your international assets are worth 10% more in dollar terms. And so I think you will get a dollar tailwind behind a lot of international assets in 2021. I think it is incumbent on asset managers to make sure that they manage sustainable funds in a way that maximizes return for investors too. You don't want to have investors get substantially lower returns just because they care about the planet or care. There's a huge demand for this. And a lot of people, particularly, they reach a certain stage in life, they're retired, they've accumulated a lot of assets. Their goal isn't just money. Their goal is to try to do something for the planet, do something for society in their lives. And if they've accumulated a lot of money, that's a way to express that. So I think there will be a great demand for funds which really do help tackle some of the greatest problems we face around the world in terms of inequality, in terms of the climate, in terms of social justice. And so I think there will be a great demand for ESG products and investment opportunities. So I think that's going to be an increasingly big story in the years ahead. I think there's blockchain technology will. I think digital currencies will overall. But I am very nervous about individual, particularly private sector, digital currencies because they don't actually serve as a currency. I mean, Bitcoin is not a store of value. It is not an accepted medium of exchange. And it's not a good unit of account. And the reason is because it goes up and down. I mean, it's a speculative asset. A currency is supposed to be stable. That's kind of the whole point of a currency is I give it to you, you give it to the next person, I know what it's worth, you know what it's worth, they know what it's worth. That's what Bitcoin doesn't do. And I think there is going to be a lot of room for digital currencies which are tied to the US dollar or the euro or even the renminbi. I think that is absolutely a wave of the future, but I would be very, very cautious as an individual investor getting into an asset class which you cannot price. And, I always, I sort of joke that, Bitcoin looks great. Now, what happens if we issue Mitcoin or Zitcoin or Davidcoin? I mean, I'd love to issue Davidcoin and, you can all invest in that if you like, but there's nothing intrinsically valuable about Bitcoin because it's just ether. And unless there's some flow of services or some true limitation or some anchor in terms of store of value, it won't serve as a currency. It will serve as a speculative device. And as you know, when speculation is rife, all these things go up. But then when you have a big market correction, these things can get hurt and hurt very badly. So I'd be very nervous about any particular digital currency as a store of value.
And that wraps up this episode of BRN Weekly. have a topic of interest or someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out our daily newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for our weekly analysis show, BRN Sunday. I'll be joined by members of the media, academia, and financial services. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.